actual reason why things like the British pound and the euro are coming off, and clearly the big Brexit situation and a lot of the econs coming out of Europe of late are an absolute train wreck. Jamie also did a really cool summary of U.S. data points, University of Michigan Consumer Sentiment Index, ISM Manufacturing, all starting to paint worrisome numbers out of the States. So, maybe the long anticipated economic cycle wind down here is starting to show some data points. Before we get into the offering in earnest, just an FYI, one of our site alumni, Da Vinci, is a fairly popular guy on the net. I think he's got like 100,000 followers or something. He and I did a fun little interview conversation yesterday. I did put it out on the Twitter feed. So by all means, if you feel like listening to Dav chat a little bit about his experiences and how the market's treating him and what are sort of the benefits of participating in our education program, maybe not a bad idea just to watch that. It was a really fun interview that we did yesterday. Now on to the market, and I suppose you can hit the stopwatch now, Kevin, because all that was just fluff. So coming out of the gate here, back from the summer vacation, I do believe that the professionals are now sort of getting settled back into their workstations and trading stations, and I think we're getting some really interesting information coming out of the market here right out of the gate. First and foremost, as I had said, Brexit talk, uncertainty out of Europe, Asian currencies looking a little waffly. Yen's catching a bit of a bid here today, but on balance, U.S. dollar index is forged to a new high. It's broken that old weekly top that we were worried about that might be painting a fractal. And I think on recent offerings to you guys, I even painted how, if this actually plays out harmonically, we probably should be expecting probably like a 1.618 off of this formation, which takes us up into... where the heck are we? Of course, TradingView puts the tool right over top of the data set. But anyway, somewhere up in that area up there. And what's really interesting is if you zoom out and just do a... I think I did this off of just like this price action. If we do an AB and then clone that for our CD... you notice that that also takes us right up into that level. So not only do we have this potential harmonic painting that 1.618, I think this is, I want to say a crab, but I'm not positive. I think maybe a deep crab. But we also have an AB equals CD harmonic painting up in that area. So for the time being, I don't know whether I could actually justify putting on a trade here. Maybe tomorrow's broadcast I'll show you the British pound and the euro where those trades were initiated. But I'm thinking still higher on the US dollar index. Interesting, because usually, historically, when the US dollar rallies, gold has a hard time. I've thrown on here, because I made direct reference to it, the last sort of free video that I did for the public. I was watching to see whether we would empire out here on the gold stocks, and who better to know the business of the gold market than the companies that are involved in the business. And interestingly enough, yesterday's price action, which it really wasn't, it was August 30th, we painted an inside bar, and then you can see right out of the gate this morning they actually confirmed the inside bar bullish reversal, which sort of takes this empire pattern off of the screen for the time being. It would be really interesting to see where we close here today on the gold stocks themselves. You can see we're right up against this doji bars high. But my hunch is, looking at all the sort of wranglings in the market, risk on, risk off, risk off, I think is definitely catching a bid here today. And so I'm not quite sure which. There is, for whatever it's worth, there is the British pound bearish setup and the euro bearish setup. So, as long as they're working away, keep in mind 35% of the US dollar index is in this euro. So as long as they're painting lower prices, I can't see how the U.S. dollar is going to stop going up here. But risk on, risk off. There is the gold ratcheting higher. Yen actually might even be giving us a little bit of a buy signal today. I won't go into that in detail here. But stocks kind of waffling here, and crude oil is absolutely fallen out of bed. Long and short of it there, Hurricane Dorian, I think the name is, was threatening to go into the Gulf, and I was musing last week about wonder how much of this uppie in the oil market we saw was directly related to hurricane fears. Now that hurricane appears to be off of the east coast of Florida and is probably going to wreak havoc along the east coast of Florida, that's not in the Gulf of Mexico, so it's understandable that the oil market is coming off here, sort of breathing a sigh of relief on that front. But one market that did catch my attention, gold and silver stocks moving up, which is good, but I'm really interested, and full disclosure, I'm long off the double bottom here, but I'm really interested to see how Palladium acts here. I really like the look of this chart. Keep in mind, as another metal name, most of the palladium supply of the world is controlled by Russia. This is one of the only sort of non-Russian proxies in the space, and you can see how they're pressing him higher. And I've noticed that this stock actually really likes to act as a leading indicator in the space. So if he's pressing higher, and I showed you that gold and silver stock index, silver's pressing higher. My hunch is, the fund managers and stuff coming back from vacation, they like the metals, and I think they're still on the long side and bidding this stuff up. So that's about all I really wanted to comment on the broader market. Let's pop on over to crypto now. Bitcoin, really interesting levels here. Unfortunately, I can't really start pounding the table on the bull side just yet. I think we have this predominant validated, you see the market structure that has validated this trend line. I think this is really the dominant trend line, downtrend line in the market right now. Full disclosure, I was very, very worried when we started emming out heading into that holiday weekend. And we got news from the CME that some big cat squared a huge position and dumped the price. Heading into the weekend, I was working a short trade off of my bot setup, kind of like I showed you on the British pound and the euro and stuff. We had my move stop to scratch level hit on that CME dump event. And then the question was ultimately, do we go and take these lows out? And I think in the, I did like a 2-hour broiler chicken show on Sunday. I simply said, I thought that through this event right here, the market was basically asking, there's 38.2, this was the dump candle on that CME event. This, I think, was a really important level, this reaction high off of the dump event, basically where the sort of demand stopped following that event. And also, too, notice that was a market structure level. There's 38.2, and what's really interesting about this too is also the bottom of value. So through the public broadcast, there's my move stop to scratch level. So on this trade, I just simply moved my stop to scratch and just simply said, if the market can work its way back up here, I'll just walk away at scratch. Big deal. So what? Next bus in 10 minutes. I'm not emotionally attached to any of these trades. It's just a setup. Interesting, through that broiler chicken show and through the weekend, we had sort of painted this as the big tell. If the market could accept back above this level, previous market structure failure, the reaction high following the CME candle dump event, 38.2 of this range, and value low, then I think there's a pretty good shot that we rallied back up top. I think on the public offerings, I was drawing trend lines like this and just simply saying I thought that if we did rally back up, we'd run into resistance against this trend line. And, fingers crossed, like I said, I had the short working. We would run up against the POC and roll over. But what was really interesting about this, and I actually felt a little remiss because a little bit of a bias because I had a short trade on. And I'm debating to myself whether I should have trades on because I just want to give the straight message of what I'm seeing without like subconscious bias coming in. And I think I got a little bit bias related there. I didn't want to see this happen, but it did. But the interesting thing about this is we actually have a rule that just simply says that if the market leaves value, below value here, turns around and accepts back into value, which is in essence what this 38.2 resolution was, that 80% of the time it should go up and tag value high. And lo and behold, ding, 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 right up against value high here. So my apologies. I didn't mention that previously. Like I said, I think I was actually myself subject to a little bit of bias. But, full disclosure, and I even tweeted it out and posted on the site when it happened. On this tag of my entry level, I just walked away from the short at scratch. Big deal, no emotion, just the way that it is. I do find it fascinating that it did actually complete Hoag's 80% trade. But where do we stand now? I think I've talked to you guys recently about, we could very easily be painting just an absolute insano bullish bot setup here. It's totally possible. And it might look something along the lines of this. And I mean, these kind of chart patterns, when they get this big, hell, they even give an old man like Beamish vertigo. We did 33%. We haven't gone beyond 66%. So what I want to see now is, can I see 3 higher lows for us to start thinking about trend continuation? It's totally possible. I don't know what the hell's going to happen. You never know in this crazy world. So, if we can actually start accepting, and I'll just take this off for the time being. If we can actually accept above this trend line here, and you can see 1, 2, 3, 4. We're trying to resolve it right now. We haven't yet. We're sitting right at that trend line. I'll take off all the little lower time frame references here. Right, so there we are, just sitting right on that trend line. If we can actually break this and we can start showing a W on the other side of the trend line, oh boy, Brian's going to start getting really bullish. Of course, it's just a setup, right? You don't know what the hell's going to happen in this world, but if I see something along these lines, then I can start thinking bull. And of course, there is the bot entry level, which to me really looks like the market is actually setting up this level as a big showdown. All right, hopefully everybody can see that big ass W that could come in there. We're still a long way away from that conversation. There's got to be a lot of work done here before that event can happen. I'm a little concerned that people in the public are like, man, this is it. We're going straight up. I think there was actually a half decent long setup down in here. And hats off. We even had some TRI alumni pointing out that things like tools that I actually teach in the program were painting bullish divergences. There's that MACD bullish divergence. I don't know whether Willie actually officially got stupid off of Coinbase, but I do know that there were some exchanges that they were painting that Willie actually went officially stupidly oversold. And what I would even suggest is just off of this range, what's a 50% retracement? So something along the lines of 50% level, 11,469. So a rally off of these lows for a tag back up to this 50% level, which gee whiz happens to be the bot long entry. I think that's very realistic here, but for me to get uber bull, I got to see a W on the other side of this trend line. So we'll keep watching for that. Finish off today's sort of free broadcast. A couple of names within the crypto space, and as I had sort of said in the Da Vinci interview yesterday, what I'm really doing as an individual is I'm hunting for the companies that can leverage blockchain, that can leverage mining and all that kind of stuff for profit. A couple really interesting setups that I'm watching very closely. I might have a trend continuation trade developing here on HUD 8. From what I understand, their cost of production is around $3,000, $4,000 a Bitcoin. So they are very profitable. You can see 1, 2, 3 getting some serious looks here. And hopefully you can see the W's trying to form off of the bot level. So I'm watching this one really closely. Do your own due diligence. Not financial advice. This is just what I'm doing with my money. So that's one for you to chew on. And then also, too, very interested in this Riot blockchain. And again, of course, this is all predicated on whether Bitcoin does break out here. But hopefully everybody can see really interesting W's potentially forming here. Kind of a head fake W on that. We didn't make a clothesline W here. We made new lows. Now hopefully you can see we're even getting a potential clothesline W here. So I'm watching the price action here on this Riot blockchain really closely. Of course, bottom end of the range. I don't know whether we're actually getting signs of divergence just yet. Oh yeah, you can see the divs are building here. Lower lows, higher hot lows. Nice little wedge trying to break out. We've got momentum stupidly oversold. And I even think we might even have a OBV div forming here as well. So nothing really definitive just yet, but I'm definitely watching this guy with a very, very close eye here. And if we print a close above this is that sort of 197, let's call it $2, I'm probably going to be on the buy side. So again, not financial advice. I'm just telling you what I'm doing with my money. All right, I think we'll leave the summary video at that for today. I hope you enjoyed the offering. Give you a few ideas to think about within the blockchain space, also within the metal space, and I also made a little commentary on US dollar index. All right, have yourselves a great day, everybody. All the best, and bye for now.